Hello and welcome to the Weekly Forex Outlook at xm.com. Next week will be a busy one with 3 central bank meetings to kickstart 2025, including the Fed, ECB, and BoC. In addition, traders will be keeping an eye on US GDP and PCE inflation data. I'm Maria Bashir, and joining me is lead market analyst Rafi Boyadjian. So Rafi, let's begin in the US, where the economy continues to show resilience. Can you tell us about the inflation picture there today, what the Fed might decide to do on Wednesday, and how that's likely to impact the dollar?
Well, Maria, the focus will pretty much be on the inflation picture as far as the Fed is concerned, because they have been rather worried that inflation is kind of headed in the wrong direction, or at least inflation isn't coming down as fast as they hoped it would. And so we're likely to see the Fed take a pause in January, because we've seen basically rate cuts since the September meeting. The Fed funds rate has been reduced by a full 1 percentage points. So the Fed is probably going to take time out in January to wait for further progress on inflation, because we've seen actually in recent months both headline CPI and headline PCE inflation head higher, and we expected to see when we get the next PCE inflation numbers on Friday, we think that the core PCE price index, which is the most important one that the Fed looks at, that's expected to basically stay unchanged at 2.8% year on year, which means again not much progress there. That's still some distance from the 2% target. However, when we have a look at under the hood, in recent months there's been some encouraging signs that certain categories of inflation where we've seen the most stickiness, it's basically starting to come down now. So we could see some progress in the first few months of 2025, some declines in inflation readings. And this is what Governor Waller was kind of trying to maybe signal to the markets, because markets had kind of become a little bit too hawkish with their rate cut expectations. At one point, we were seeing markets pricing just over 25 basis points rate cut for the whole of 2025. And Waller kind of signaled to the markets that actually, you know what, it is possible we could still see some good progress in the next few months, and that might justify 1 or 2 rate cuts in the first half of 2025. But nevertheless, we didn't see a huge pullback in the US dollar, because of course we still have this tariff threat hanging over the markets. Although on that front, it's obviously was good news for the markets when Trump said for now he's thinking just about 10% tariffs on Chinese imports, and also we haven't really had any specific tariff mentions when it comes to the EU. So it looks like Trump is focused on doing some negotiations first before he decides to impose a huge hike in tariffs. So that's kind of good news on the markets. But the Fed, although they're going to be keeping an eye on that as well, I think there is a chance that the Fed might not be quite as hawkish as it had been recently. So it is possible we might get a slight dovish lean at the January meeting, even as they keep rates on hold. But nevertheless, for the US dollar, I think investors might remain kind of cautious and wait to see this progress on inflation actually appear in the data, and also wait and see whether we're going to get any further announcements on tariffs from Trump in the coming days.
Moving over to Canada now, the BoC will announce its decision a few hours before the Fed does on Wednesday. It has been cutting rates aggressively during this easing cycle. Do you think the BoC will cut again now? And what's in store for the loonie?
So that is right. The Bank of Canada, in fact, is the most aggressive in this current easing cycle globally. So that kind of raises the question, how much room do they have to cut, to continue cutting at the same pace? So probably we're going to see the Bank of Canada maybe suggest that they might that it's time to slow down the pace of rate cuts, although it's possible that they might signal a pause. But I think when we look at the latest inflation data out of Canada, we did see a further dip in headline inflation to 1.8%, which is one of the lowest among the major economies. Although we are seeing some improvement in the Canadian economy, I think the Bank of Canada would like to see further strengthening of the economy before they call time on rate cuts. So probably they will signal that they will continue cutting rates, but simply not at the same pace as they did in 2024. So for the Canadian dollar, it's hard to see how much of a support this is going to be, because it's fallen to multi-year lows against the US dollar. Canada, of course, could face 25% tariffs from the Trump administration. So I think there's a lot of concerns still hanging over that currency. So we're going to have to wait and see, what's going to happen on the tariffs front. And for now, I think the Bank of Canada, they're probably going to maintain their dovish stance.
Turning to Europe now, the ECB has gradually been trimming rates since June 2024. Do you think the gloomy economic outlook will change anytime soon? What are we likely to hear from the ECB when it meets on Thursday, and what's the outlook for the euro?
Well, I think probably the European Central Bank is the least likely to surprise next week, because I think they've been fairly consistent in their communication. Basically, the ECB wants to continue cutting rates, but at a gradual pace. We've seen quarter point rate cuts 4 times in 2024, and we're probably going to see something similar in 2025. There are some expectations that the ECB might go a little bit more aggressive, maybe cut by 50 basis points. I don't think there's grounds for the ECB to do that, because although inflation overall is a lot more under control in the Eurozone than it is in the US, we still have, though, fairly high services inflation in the Eurozone, and also wage growth, in fact, spiked up in the third quarter of last year. So the ECB is mindful of that. So I think they're going to be happy to go with 25, but I don't think there's going to be much support within the Governing Council for 50 basis points. But nevertheless, I think investors will be watching President Christine Lagarde's press briefing to see if there were any divisions within the Governing Council, if maybe the Dows were pushing for a more aggressive rate cuts. I don't think we're going to get any sort of any concrete signals on that. So probably the ECB will remain on the back foot, and ECB will cut as expected by 25 basis points, and probably signal that they're going to probably cut again in the next few meetings.
And finally, is there anything else traders should keep an eye on next week?
So we're going to be getting some CPI data out of Australia. This will be the quarterly CPI readings. So this could be significant because we do have an RBA meeting coming up in February, and potentially, of course, the RBA, just to remind our viewers, that is actually the only major central bank apart from the Bank of Japan that hasn't been cutting rates. We know the Bank of Japan is hiking. For the RBA, has more been a question of when to begin cutting rates. And so if we get a soft set of CPI numbers out of Australia, it could potentially boost expectations that the RBA will cut rates at its February meeting. And that could be quite negative for the Australian dollar at a time when it's trying to recover against the US dollar. And we still have those concerns about the recovery in China, which, by the way, we're going to be getting some manufacturing PMIs out of China as well. So I think the Aussie might attract some attention as well in the coming week.
Rafi, thanks so much. This was the Weekly Forex Outlook here at XM.com.